Topic: EBIT and EPS. Subtopic: Meaning and uses of EBIT/EPS calculation. EBIT and EPS. The EBIT/EPS approach to capital structure is a tool businesses use to determine the best ratio of debt and equity that should be used to finance the business assets and operations. At its core, the EBIT/EPS approach is a way to mathematically predict how a balance sheet structure will impact a company's earnings. EBIT refers to a company's earnings before interest and taxes. This metric strips out the impact of interest and taxes, showing an investor or manager how a company is performing excluding the impacts of the balance sheet's composition. In terms of EBIT, it doesn't matter if a company is overloaded with debt or has no loans at all. EBIT will be the same either way. EPS stands for earnings per share, which is the profit the company generates including the impact of interest and tax obligations. EPS is particularly helpful to investors because it measures profits on a per-share basis. If a company's total profit is soaring but its profit per share is declining, that's a bad thing for the investor owning a fixed number of shares. EPS captures this dynamic in a simple, easy-to-understand way. Earnings per share (EPS). Earnings per share (EPS) is a profitability indicator which shows dollars of net income earned by a company in a particular period per share of its common stock, also called ordinary shares. Earnings per share is calculated by dividing net income for a period attributable to common stock owners by the weighted average number of common shares outstanding during the period. EPS is a very important profitability ratio, particularly for shareholders of a company, because it is a direct measure of dollars earned per share. Accounting standards, such as IAS 33 and IFRS Framework and ASC 260 and US GAAP, require companies that have securities that are publicly traded or which are in process of issuing publicly tradable securities to report EPS figures on the face of their income statement. In analyzing profitability of different companies, total net income figures alone are not very useful because they are dependent on size of the company. EPS standardizes earnings with reference to number of shares outstanding. However, EPS alone too is not very useful because different companies have different number of shares. Some companies opt to have more number of ordinary shares while others prefer to have less. For example, a company may go for a 2-for-1 stock split to double the number of its ordinary shares, without having zero effect on its market capitalization, i.e. its value. EPS is used as an input in other very important indicators of profitability and investment performance, such as price-to-earnings (P/E) ratio, which compares EPS with price per share of common stock. EPS is defined as net income attributable to each share of a company's common stock, or ordinary shares. Common stock or ordinary shares is the class of share capital which represents the right to ultimate ownership of the company. There are other classes of share capital, such as preferred stock, etc., which do not share in the residual interest of the company. Hence, we subtract the claim of preferred stockholders from net income to arrive at the net income attributable to common stock. Since the number of shares of common stock of a company fluctuate during any particular period because companies continuously issue new shares, go for stock splits, issue stock dividends and buy back shares, etc. Per share figure for EPS is calculated based on weighted average number of common shares outstanding. EPS comes in two flavors: basic EPS and diluted EPS. Diluted EPS is a worst-case EPS which calculates the net income attributable to each share of common stock under the assumption that all such financial instruments of a company which can be converted to common stock are indeed converted. Formula. Weighted average number of shares is calculated by time-weighted the number of shares of common stock. For example, if Company A has 1,000 shares on the 1st of January 2015, issues 500 additional shares on the 1st of July 2015 and does not change its number of shares in the remaining 6 months of 2015, its weighted average number of shares would be 1,250. 1,000 times 6 divided 12 plus 1,500 times 6 divided 12. 1,000 shares remained outstanding for 6 months, i.e. from the 1st of January 2015 to the 30th of June 2015. But for the next 6 months, let's say from the 1st of July 2015 to the 31st of December 2015, the number of shares increased from 1,000 to 1,500, so they are also weighted for 6 months. Where a company undergoes a stock split or issues a stock dividend such that its number of shares increases. The change is included in calculation of weighted average number of shares as if it occurred at the beginning of the period. Example: today is the 14th of April 2020. You are a financial analyst at JDX, a top-notch investment management firm. Your supervisor has asked you to analyze ABC, Inc. and DEF, Inc. based on their earnings per share, EPS, and P/E ratios. Both the companies are listed on MDX, the country top securities market. Stock prices of ABC, Inc. and DEF, Inc. as at the 31st of March 2020 were $40 and $70 respectively. ABC, Inc. financial statements for the year ended the 31st of March 2020 are available, which report an EPS of $2.50 per share for the year ended the 31st of March 2020. While complete financial statements for DEF, Inc. are not yet available, the company has reported its net income for the year ended the 31st of March 2020, which is $9.5 million. Following additional public information is available from the company's investor relations website. The company had 2 million shares of common stock as at the 1st of April 2020. On the 30th of June 2020, the company issued 500,000 additional shares. On the 31st of December 2020, the company bought back 250,000 shares. The company had a preferred stock of $5 million throughout the year, which carries dividend at 8%. Calculate EPS for DEF and calculate P/E ratios for both companies. Weighted average number of shares of common stock outstanding during the period equals 2,312,500 as calculated below. Net income attributable to common stockholders equals net income minus preferred dividends. Preferred dividends equals $5 million times 8% equals $400,000. Price to earnings P/E ratios are calculated as follows. ABC P/E ratio equals $40 divided by $2.50 equals 16. DEF P/E ratio equals $70 divided by $3.94 equals 17.8.